While everyone was panic selling down here, the CCI indicator was screaming buy. If you knew what I'm about to show you in this video, you could have caught this massive move too. So in this video, we will take a look at the CCI indicator or commodity channel index. And we will begin here with the very basics, and then we will move on to some practical CCI trading strategies that you can use to make money. And we will also take a look at how you can change the settings to potentially improve the indicator even further. But alright then, so before we can start using and trading with the CCI indicator, we need to learn the basics. And the very first question we of course need to answer here is, what is the commodity channel index, or for short CCI? Well, this indicator was developed by Donald Lampert all the way back in 1980, and it was actually originally developed to analyze commodities. So commodities is everything from, gold to oil to, coffee beans and so on and so on. But what is very important to notice right away is that the CCI indicator can be used for commodities, but it can also be used for stocks, cryptocurrency, forex. So you can use this indicator for pretty much all asset types. And this is very important because I know that most of you guys are not trading commodities. Most of you guys are trading either forex, stocks, or crypto. And this indicator works great for all of these. And what this indicator measures is it measures how far the price move from its average. So this is a form of mean deviation. And here the CCI indicator is a momentum oscillator. So just like, for example, the RSI indicator and the MACD indicator, it measures momentum, and it can help to spot trend strength. It can find overbought and oversold conditions and also reversals. But I'm actually not too big of a fan with this simple overbought and oversold readings. But don't worry, because later on in this guide you will learn exactly one of my favorite CCI trading strategies. And here, one interesting thing about the CCI is that it is unbounded, which means that even though most values will fall within the plus 100 to minus 100, it can go, far beyond these values in strong trends. But alright, so now let's quickly take a look at how the CCI indicator works, because in order to use it effectively, I think it's very important to at least have a basic understanding of how the indicator works. So this indicator, basically what it does is that it compares price to its average over a certain period. The most common period here is 20 bars, I think. Another common one is 14. But we will later on in this video, as I said, we will talk about some different settings you can use in different market conditions. But here, the further the price is from its average, the more extreme the CCI reading. So as a simple rule of thumb here, when the price is above 100, we usually call this strong bullish momentum or overbought, just like with for example, the RSI indicator. And when it's below minus 100, we call this strong bearish momentum or oversold. And here, as I mentioned earlier in the video, and this is worth repeating, the CCI indicator can be used in any market, whether it's stocks, forex, crypto, or commodities. But right, so now let's take a look at some commodity channel index trading strategies. And I want to cover here some strategies that are pretty common, but perhaps, at least in my opinion, not that good. And I will also show you guys step by step one of my favorite strategies. But the first trading strategy we have to talk about is the simple trend following trading strategy. And what this trading strategy do is that you simply look out for breakouts above 100, excuse me, or below minus 100, and you do this to confirm strong trends. So a very simple trading strategy could be to long when the CCI breaks above 100 and then sort of ride the trend. But this is a way too simplistic trading strategy in my opinion, and if you want to do this, you definitely have to combine this trading strategy with market structure principles and also price action. And here, of course, since this is a trend following strategy, it works best in trending markets. And as I said here, you want to combine it with market structure or sort of higher time frame trend filter. So you can use multi-time frame analysis. I also recommend for precise entries to use price action, right? And by the way, if you want to learn more about market structure, don't worry about that. I have a full market structure trading course right here on YouTube, and I'll make sure to link it up in the video card and the description. The next trading strategy I want to just mention real quick here is the mean reversion trading strategy. And what we do here is that we use it in more sort of range-bound markets to catch reversals. What we can do here, we wait for the CCI to go either above 100 or below minus 100, and then we wait for it to reverse back inside. So, for example, you could wait for, when the CCI rises back above minus 100 from below, that is a oversold baiting. But what is important with this trading strategy is that, as with most trading strategy, we want to wait for confirmation before entering. And when we talk about waiting for confirmation, we're usually talking about price action signals. So guys, I do highly recommend to dive deeper into price action, but don't worry about that because I do have a full price action course right here on YouTube as well, and I'll make sure to link that course right here. It will be in the video card and the description. But alright, so now let's switch the attention because now I want to talk about one of my favorite CCI trading strategies, and this one is called Divergence. And if you have been following, our YouTube channel and YouTube community for a while, you know that I'm a big fan of divergences, but we don't only use divergences. We always combine divergences with other things. And don't worry, I will show you guys step by step in TradingView how we can do this very soon. But first, what is this trading strategy? Well, it's all about spotting a momentum weakening before price changes. So when we talk about bearish divergence, we're talking about the price making higher highs, but the CCI making lower highs. So we have the price going in one direction, we have the CCI going in the other direction, and this indicates a potential reversal to the downside. The bullish divergence is the opposite. The price makes lower lows, but the CCI makes higher lows. And this is a potential bounce, a potential reversal to the upside. And if this sounds complicated, as I said, don't worry, we will jump into TradingView really soon. And why do we use this strategy? Well, it's useful for anticipating reversals in the market. Alright, okay, so now we are in TradingView, and I'm currently looking at the British pound measured in US dollar on the daily time frame. So we are right now looking at a forex chart on the daily time frame. But remember here that you can use this CCI indicator on pretty much all time frames and all asset types. So if you want to trade crypto or stocks, you can use it on those as well. But let's begin here by opening up the indicator in TradingView. And to do this, I want to go up here to the indicators tab, and I think it's enough to just search for CCI. And you can see that here on the top we have the built-in commodity channel index, and we also have many CCI indicators that is actually built by the TradingView communities. Some of these are locked, but most of these I do think are available on the TradingView free version. But guys, if you for some reason haven't gotten started with TradingView yet, you are actually in luck because I do have a special link to TradingView, and you can use that link to actually try out TradingView Premium, the best version of TradingView, for free for 30 days. And then if you later on decide that you like TradingView, you will get a $15 bonus when you upgrade your plan. So guys, make sure to, if you haven't gotten started with TradingView, make sure to use that link below. If you use that link, you at the same time support the channel. So thank you all so much for that. But now let's open up the CCI indicator. And I do want to start with the built-in commodity channel index right here. And the very first thing I want to do is that I just want to change a few settings. So we go down here to the settings tab of the CCI right here. And for now, I just want to do a few style settings right here. I want to uncheck the moving average because we don't really need it. We can also change the thickness here of the CCI so you see the line a bit more clearly. You can also, if you want to use an area, this is what I showed you guys in the intro. But for now, let's just keep it simple with a line. And now, if we look at this chart, the first thing you have to notice here is that the price was in a clear downtrend. You can see we had a low, high, we had a lower low, lower high, lower low, lower high. So we're printing consecutive lower highs and lower lows. So we are in a clear downtrend. But here we actually saw a very interesting signal on the CCI. You can see that from this low to this low, you can see the price prints lower lows, but here the CCI also prints lower lows. So the CCI and the price goes in the same direction. But when we look at the next lows from this low to this low, you can see the price prints lower lows, but now the CCI clearly prints higher lows. This right here is what we call a bullish divergence and indicates a reversal to the upside. So that is great because that is a bullish signal on the CCI. However, what I don't like to blindly rely on the CCI indicator. And when it comes to indicators in general, if you have been following my channel, you know that I always recommend to combine it with price action and market structure. And here, when it comes to the market structure of this chart, we can actually draw out a trend line right here. Let me actually change it to a line like this. So you clearly can see the downtrend the British pound was in right here. So here, I basically are seeing two ways to enter this signal. The first potential entry is that after this divergence, this is one bullish signal, we actually got another bullish price action signal right here. This right here is what we call a bullish engulfing pattern and is a bullish Japanese candlestick pattern, also indicating a reversal to the downside. So here we had two reversal signals at the same time, which makes the trade more likely to succeed. The more signals we have, the more confidence we have, the better. Another potential entry point could actually be this candle right here. Why is this candle a potential entry? Well, this was when we broke the downward sloping resistance line, right? We have been seeing resistance coming in, multiple times at this level, and it was at this point we actually saw the breakout. So here you have two potential entry points, and in my opinion, both of these could very well have worked. It's hard to say which one of these are the best, but in general, I recommend to focus on one type of strategy. And as I said, the more variables, the more bullish variables you can combine, the better. But right, so now last but definitely not least, let's take a look at how we can change the settings of the CCI indicator to potentially make it even more effective. So to do this, we want to go down here to the settings tab, and then we want to navigate here to inputs. And you can see the first setting is called length right here. And the standard setting, remember from earlier in the video, is 20 periods, but you can also change it to 14. 14 is the length when it, for example, comes to the RSI indicator, and many other indicators are based on 14. So that is why many traders prefer to change to 14. But I think the creator of this indicator used actually 20 as the base. But here, I would say that these settings are mostly used for medium-term time frames. If you are, day trading or maybe even scalping, you might want to use a shorter length, meaning that the CCI will use fewer candles to calculate, to do its calculations. So for scalping to day trading, you might want to change all the way down to 10. Some traders even go all the way down to 5. So I would say the range here between 5 and 10 could be the best range if you're day trading or scalping, especially if you are trading only a few candles at a time. But the opposite is also true. So if you are more of a long-term trader, maybe even an investor and using the CCI, you might actually want to adjust the range all the way up towards 30 plus. This will make the CCI, react slower, but you can at the same time get more reliable signals. As for the smoothing here, remember you can also apply a moving average to the CCI. In general, this is not something I do, but I know that there are many traders that like to apply a moving average. It's pretty much the same as when you use a moving average on the price, but now you use it on the indicator. So you can definitely feel free to do that. And here, as for the source, this is also very interesting because the standard is high, low, close 3. It means that the indicator uses the high, the low, and the close of the candle to make its calculations. But what many traders do, and this is a setting I actually like, is the open, high, low, close setting. So if you choose this setting, you will actually smooth out some noise in the market, and you will also make it so that the indicator includes the whole candles in all its calculations. And this is something that many traders highly prefer. But alright guys, so now this video is, as usual, with all my yapping, the videos gets pretty damn long, pretty fast. So I think I will wrap this video up right here. But as always guys, if you are a channel member, a gold or diamond member, you will get access to the rest of this presentation and many other presentations as well. You will also get some exclusive videos, you will get some trading tools and much more, while at the same time supporting the channel. So if you want all of this while supporting the channel, please consider becoming a channel member by clicking join down below. But right guys, so now in order to get the most out of the CCI, you really need to learn about price action. So if you have some time over today, I highly recommend to check out my full course on price action next.